April 15th, 1987, IRS reports 7 million children have gone missing, nowhere to be found. But where did they go? Okay, let's take a step back. Tax year 1987. Americans filed their 1040s in 1987 per usual. One thing to note, 70 million dependents or children were claimed in 1987. Business as usual, this is not out of the ordinary. But we take a step back to 1986 and note that 77 million dependents were claimed. That's a decrease of 7 million dependents or 7 million children in 1 year. So between 1 year, 3% of the population vanished, all dependents, all children. The U.S. population in 1986 was 240 million, and 7 million of them vanished into thin air. Where did they go? Nobody really knows. Parents, police officers, detectives. Nobody could find the missing children. No one knew what was going on. There were no answers. Surely, an emergency of this scale would get the attention of the President of the United States. At this time, President Ronald Reagan. What did the President have to say about this crazy emergency? The only clue the President gave us was the Tax Reform Act of 1986. On October 22nd in 1986, Ronald Reagan signed into law the Tax Reform Act of 1986. So what did the Tax Reform Act say? Well, we take a deep dive and find that in Title 15, Compliance and Tax Administration, Subtitle C, Information Reporting Provisions, the following direct quote: requires the furnishing of taxpayer identification numbers for dependents claimed on tax returns. So, what does that accounting jargon actually mean? It means that Social Security numbers were required for every dependent that a parent filed on their tax return. If you didn't have a Social Security number, you weren't able to file your child as a dependent. This shouldn't have changed much, right? There's only a couple explanations. This new requirement either meant that parents lied and documented fake dependents on their tax form, or indeed 7 million children went missing. But why would parents lie or make fake dependents on their tax forms? It turns out that each dependent claimed on your taxes in 1986 reduced your taxable income by $1,080. Inflation adjusted to 2024, that's $4,000 decrease in your taxable income. So you're paying less taxes with each dependent that you claim on your taxes. But surely parents wouldn't cheat the IRS, right? I mean, Americans love paying taxes. In fact, we always ask for increases in taxes. If you remember the Boston Tea Party, one of our nation's most historic events, you'll remember that we celebrated and threw a party, a tea party, celebrating how much we love paying taxes. Okay, parents totally cheated. According to rumor and wise tales, people have known to claim dependents for their dogs, their cats, any other list of pets. And they even made up fake children that didn't exist. This had huge implications on the IRS, and they weren't fools, and this is why the Tax Reform Act of 1986 included this provision. The decrease of child dependents claimed of 7 million year over year between 1986 and 87 increased tax revenues by $2.8 billion. If we adjust that number from 1987 to 2024 for inflation, that's $8 billion increase in tax revenues collected in 1 year, simply because parents were cheating on tax returns and claiming fake dependents. So, 7 million children gone missing. Not quite as bad as it sounded, but we know now the case is closed. The children were not missing. In fact, the IRS got smart and realized what parents were doing, claiming fake dependents, fake children on their tax returns. This accounting mystery is closed.